talking about?
Ladies and gentlemen, welcome to the Big Tech Frenzy. And today I'm here with the great and powerful Stephen Fiorillo.
How can this be the FinTech Frenzy if we're not talking about FinTech?
I said the Big Tech Frenzy, my
I
friend.
heard FinTech Frenzy.
No, that's selective hearing. It's called the Big Tech Frenzy. Look right above my head. You see the title right there? Everyone else can't see that, but it says Tech
look
Frenzy.
at that. Look at that.
Yeah. All
You're
right.
a good role model. What can I say?
I'm not even going to tell everyone what you called me earlier.
Are you ever going to shave that mustache off?
No, it's just going to keep growing.
Okay.
I honestly, every time I shave it, the market goes down. So I did take a little bit off in February, but I'm not doing that in March. So you guys are welcome.
Okay.
Do you know why I'm wearing this jacket, Steve?
I have no idea where you're wearing that jacket.
Because we're talking about the great and powerful Nvidia stock. I'll be Jensen.
Go on.
Mm-hmm. I'm bringing Jensen into the conversation, and I want to know what's going on with this stock. Okay, I've been buying this company. You told me to buy it, and now I'm here, and I don't like what's happening.
All right, let's back up and let's rephrase this. I did not tell you to buy this. You told me to buy this. And I will admit that I was bearish on Nvidia back in 2022 because I did not see the potential because it was declining in revenue.
Now, what was the cost of the stock back then whenever I told you to buy it?
We can look at a chart. I have no idea. Was it 50 or so based on
30.
Adjusted? 30, whatever it is.
30.
And you were 100% correct. And I changed my opinion after probably end of 2023 when it seemed like the use case for their chips would transcend what it was previously doing. So you were 100% correct. I don't say that often.
Well, if you look at the thumbnail, I also have included Google, so I'll give you the credit there.
No, why would I look at the thumbnail?
Okay, well, you're in it, so.
Okay, great.
I throw you in. I've got one really low quality image of you, but maybe I should take the one from the steakhouse that we took.
You could use that also. I really don't care.
But what is going on with Nvidia? Why is it selling off, and should it be selling off? Should I be selling?
Well, I think everybody has to do what is right for them. I mean, I'm not going to make any any direct statements. Everything's going to be a generalization, but I'm certainly not selling. I was buying today, and I am planning on continuing to buy if it continues to do this. And I would probably consider exiting some positions if it breaks below 115 and moving more into Nvidia. I mean, I can't find a flaw at the moment. And I am very annoyed, for the lack of a better word, of where it's trading. So I'm going to show you a couple of things. So I know you love charts. So I made two charts that you would not make on your own.
I've been known to make a few charts.
Yeah, I don't think you made these. At least one of them you definitely did not make.
Okay, let's see. I'm excited.
Before we go to these charts, let's just say that for people to get bearish or for people not to like this quarter or try to hang on to every little word that Jensen said and try to pick things apart is getting annoying because this is a company that just generated 114% year-over-year revenue growth. And this is not a company that went from 500 million to 1.1 billion in revenue. This is a company that just went from 61 billion to 130 billion in revenue.
Yeah.
This is a company that just increased its gross profit by 121%. And on a net basis, 145% year-over-year growth. They added $43 billion of net income year over year this year. And people want to be bearish. That is wild in my mind, considering where this is trading. And things can be overpriced. And I am an original Palantir bull. I was on Palantir before everybody, well, at the same time as all the original people. So
Sure.
before 99% of the people.
Mm-hmm.
Obviously, Amit and other people, same time as me. But I've been saying that it's massively overvalued, and it got way ahead of itself. I didn't sell. I'm still a shareholder. But I have said that Palantir is way overvalued, even after the reduction from 125 to 85. It's still massively overvalued.
However, if I could stick in there, you were talking like the other institutions that said, leave valuation alone on this name. It can go higher.
What name?
Palantir.
They're crazy. Obviously, it didn't go higher.
Yeah, I know. But you said it could definitely go to 150.
The momentum showed that it could because everybody kept buying. And I kept sounding the alarm that whoever is buying at 120 could be left holding the bag because stocks just don't go up in a straight line. And
there were just so many better picks there as well. Like,
I love Palantir. I'm always going to be a Palantir shareholder to some degree, but that's a separate conversation. But the point is, Nvidia is the polar opposite. Nvidia is now trading at the cheapest multiple it's probably traded at in years.
Mm-hmm.
You are getting Nvidia at less than 30 times this year's earnings now, and you're getting Nvidia at 20 times 2027 earnings. This is a valuation where Nvidia is now a value stock, and I'm going to show you how it's a value stock. But let's go to two charts. And when we think about these charts, let's think about business for a moment. The whole idea of business is to generate a product or a service that is in demand and then to turn a profit from it. So you have a lot of people investing in companies that have figured out a product or a service that people want, but they may not have figured out how to turn a profit or how to be a high margin business. Sure. Nvidia's figured it all out. I mean, their profit margin's over 55% now, which is incredible. They're a hardware company operating at what SaaS companies would love to operate at on a net income level. So they have everything going for it. And when we talk about capex spend, that's even crazier. So let's bring this up. All right.
Here we go.
So let's start with cash from operations first. And let's go from a cash flow perspective.
Is this the chart that you said that I've never made?
You've never made this chart. Because you don't know what a buyback is. You've never made this chart. Stop it. What?
No, it just reminds me of the Sofi after hours conversation that we had where you were just going on and on about cash from operations and Google's capex. But anyway.
Yeah, because you don't care about this stuff. I do.
No, that's not true at all.
You care about growth at all costs. No. I care about fundamentals.
Okay, go ahead.
Okay. So when we look at 2022 to 2023, and I am going to say with the dates on this, yes, this was NVIDIA's 2025 fiscal year because they end their fiscal year in January. This is really their 2024 operational year. So I'm calling it as 2024 because 2025 has not happened yet. Right. They haven't even reported their Q1 2025. So we're not going to get into a whole semantics thing about that. They just did their 2024 year. So their cash from operations has more than doubled over the past year. And they're running a very low capex budget because they're not the ones that are building data centers.
Yep.
Their capex spend is incredibly low. This is allowing them to increase their buybacks at a staggering level. In the trailing 12 months, which is what I will say, so we don't get into an argument over dates, they have bought back more than $40 billion worth of shares. And their cash from operations has exploded off the charts over the past 2 years. That number is likely to continue to go up, and they are likely to buy back even more stock this year. And then when we look at what they're doing from a revenue, gross profit, and net income level, the reason in 2022 why I did not want to invest in this, and at the time, it was going down, but you stuck in it like a champion and rode it all the way back up. And they really didn't do anything in 2022, considering they generated less gross profit and less net income. But you had the explosion in AI in 2023, and that is carrying over into the data center sector. And their profitability, their revenue growth is incredible. It's like nothing we've ever seen before.
Literally.
It is like nothing we have ever seen before.
It's a straight one of one in history right now.
It is a unicorn, and it is a unicorn that is operating at a 55.5 or 56% profit margin. It is incredible. And the fact that they are expected to do around 42 billion in revenue for Q1, you extrapolate that out with a little bit of growth each quarter, you're looking at a company that is probably going to do, call it, what do you want to call it? 180, 190 billion this year in revenue, that area.
Sure.
Go a little bit more conservative, 170, 175.
Yeah. No, yeah, I'd say, yeah, 180.
Somewhere in that area, 180. So at 180, even at just a 50% margin, let's say they lose 6 points on the margin. You can do math. What does that give you for net income this year?
For 6%?
50% on 180.
90.
That's correct. 90 billion in net income. If their margin goes down and their revenue is probably just matching what they're going to guide for.
A fifth of a trillion, yeah.
And when you think about what that is, this year they did 72.88, so basically 73 billion. So you're getting even more net income growth. And then we start looking at how this is trading, okay? And this is where I get very annoyed now. So I actually it's this first top grid. So I put some additional companies in here outside of the Mag 7 for a very specific reason.
Right.
And especially my favorite one to rant about these days, which is Costco.
Yeah.
I can't stand it. And I'm going to bring it full circle. Nvidia, which I shaded gray.
You should zoom it in a little bit more if you can.
Is that better?
Yeah.
Should I shade a different color, or can you tell?
I mean, if you want to make it yellow or something, yeah.
Yellow was a little bright, but okay, we could do that.
Well, do the one underneath. Okay.
That's fine. So Nvidia is trading at 28 times this year's earnings. Okay. Trading at 20 times 2027 earnings. They're expected at the end of this year to grow their earnings by $1.78 per share over the next 2 years, which is giving you an additional 40% growth. Why on earth would somebody want to pay 47 times 2027 earnings for Costco when you can get Nvidia at 20 times 2027 earnings? It doesn't make any sense to me. And I love when people tell me I don't understand growth, because I do understand growth. I just happen to like EPS growth over revenue growth. And the earnings growth is because it's pure profitability. And you look at some of these other companies, Costco this year, they did a tenth of Nvidia's net income. They did like $7.5 billion. It is insane to me that people would rather buy Costco when they're doing a tenth of the net income and you're paying more than double the forward multiple on earnings and there's less earnings growth. It does not make sense to me. And I love the idea that Costco is a recessionary play, because I got news for everybody. We just got the GDP print. We did not have a negative quarter, which means at the very best for the bears, a recession is 6 months away, at the very least. Now, a recession is imminent, but when that happens is a different story. There's no signs that we're going to be in a recession this year.
And here's the thing too, though. I was thinking about this as companies might want to potentially slow down or tighten the belt or whatever. Can they even do that if there are other?
I'm going to explain why. So
go ahead.
Basically, none of the Mag 7 companies outside of Tesla are companies. They are all companies that should be considered recession proof. They have bigger balance sheets and more profitability and more cash on hand than every company that the market considers recession proof, from Coca-Cola to Costco. All of them. They cannot take their foot off the pedal. I'm going to bring up a different chart in a sec to explain that aspect. But right now, when you think about the growth, I mean, why would you want Walmart at 32 times 2027 earnings? I mean, Coca-Cola, this is trading same value. And Coca-Cola is traditionally valued as a value stock or looked at as a value stock. You got 3% dividend. It's a dividend king, 50 years plus of dividend growth. Coca-Cola is your quintessential value stock.
But Kevin in chat here really quickly is saying that people are unsure if demand is going to keep up for Nvidia, but yet Costco will always be there. Can you help explain why that doesn't make any sense?
I would love to explain why that doesn't make any sense. I'm going to bring up a little chart that I made. I just got to go to the article that I know it's in because I don't know what spreadsheet it's in. So just give me a moment. But yes, I'm going to debunk that theory right now. Don't you worry.
Yeah, I mean, even if the demand holds up for one more year for Nvidia, you know how much that's going to close the gap on the price to earnings versus Costco making small improvements in their earnings each year?
We're going to go through their income statements.
It wouldn't make sense if they were the same price, let alone if they're
Let's humor me for a moment. This is what the spend on the biggest 4 companies that spend on capex are projected to do this year. They did $210 billion in 2024. They are expected to do $320 billion in 2025. Just these 4 companies. Here's the way that the math breaks out. Nadella comes out and says they're going to do, what was it, 80 billion?
Yep.
Jassy comes out and says 100 to 104 billion.
Yep.
Zuck comes out and says 60 to 65 billion. And I think Alphabet was somewhere around 75.
75. Yeah.
So these companies are not taking their foot off the gas. And here's why I don't think that 2025 is the end of the CapEx spend. Microsoft does not report on an annualized basis. They report on a biannual. Their fiscal year ends June 30. So when they're reporting their Q4 earnings, everyone else is reporting Q2 in the summer. Microsoft is going to come out and have to come over the top on CapEx spend because Amazon came over the top. Jassy said he would like to spend more on CapEx, and they're going to be halfway through their cycle with another 2 quarters on that $104 billion spent. So now Nadella is going to have a choice to make. And if it looks like these companies are not slowing down, he's going to have to come out with another very big package on CapEx. And then you go into Q4. Microsoft will be halfway through, and these companies will probably repeat what they just did and all come over the top and all come out with big CapEx spends again.
And by the way, I think 3 out of these 4 companies came out and said that their cycles on replacing this hardware went down or shortened as well.
And Jensen came out with a new chip announcement also. So guess what? If one of these companies starts buying it, they all start buying it. So it's going to be these companies that dictate when the chip cycle stops and it becomes maintenance, not performance. And that's not stopping. And I want to show something that people don't really look at, because people don't look at Oracle, but it's a very important company to look at. And it's not in the Mag 7, so people tend to miss things with them. But Larry Ellison said something very important on the Q2 2024 earnings. All right, let's go. Can you read something for me, please?
Can you zoom?
Read that.
Oracle is in the process of expanding 66 of our existing cloud data centers and building 100 new cloud data centers. We have to build out 100 additional cloud data centers because they are billions of dollars more in contracted demand that we currently can supply. So essentially, like Google and like Microsoft and like all these other cloud service providers, is that there is so much demand that they need to keep building because to meet what they could possibly sell, which means they're supply constrained.
So you have Larry Ellison coming out and saying that in the summer of 2024, and that was well before he came out and did the press conference with Altman and Masasan. They are dropping so much money on data centers. We haven't even seen. We are just seeing the initial stages of AI. We're not even seeing what this is going to transform in the medical field. And this is at the point where
I don't even think you should break it down into one specific, and it'll be every single.
It's going to be everything from robotics to generative machine learning.
JP Morgan just came out today and said, we have 450 different applications that we're using AI for, and that's going to be thousands by next year.
Yeah, I saw that. It's
That's crazy.
Citibank on their thing, they have tens of thousands of their engineers using AI tools. It is thousands of engineers. It's in their earnings report.
But that's nuts. Like, and it'll be every facet of computing. And not only that, like what Jensen was talking about, he goes, like, all the existing software tools will also be built in AI. So then things that might even be using some form of CPU will now need to go to accelerated computing. So they think that like the GPUs are going to be taking over more market share of just straight processing. Like, so not only is the pie expanding like some crazy balloon, but GPUs are going to increase in their usefulness in that, you know, computing balloon. Like, it's just insane. And it seems like I was talking to you, Steve, earlier, like this is happening so much faster than people are even realizing.
People don't, when I talk about this, I'm not going to say where I talk about it, but when I talk about this to people, they think I'm crazy. A lot of people just don't follow this the way that I follow it or the way you follow it. So when you have a conversation with somebody that isn't really following this stuff or isn't listening to earnings calls, and maybe they're not even investing in these stocks,
sure,
they think that you're speaking a different language. And they don't understand how quickly things are happening, as you said. And you think about robots. I am telling you, it is going to be one of the biggest transformational things we say. The combination of full self-driving and the robots, the generative AI and the capacity for chips that's going to be needed and data centers is going to continue to expand. I used to think that the Nvidia trade had another year or two left before you got to maintenance from performance. And I'm starting to think, after everything that I'm seeing, we may have 3 or 4 years before that happens.
The craziest part here as well, and I was talking to you earlier, is like the cost of these new models that are coming out, like ChatGPT 4.5, is magnitudes higher than what they were doing before. I mean, like 5, 6, 7x. Like, there's going to need to be significant breakthroughs to push even faster. But the funniest thing about AI is, like, AI is going to be a significant part of finding those breakthroughs is having smarter and smarter models that are helping break down this like these problems. So, this isn't like early age of technology where we're like, finding fire and then finding other things where there's long extensions between breakthroughs. The technology that we're making today is helping us find the next technology. And it's like happening at essentially every month or so, we're finding some breakthrough next new model. And Jensen tried to highlight just how many different scaling laws that we're on right now in terms of like, Moore's law was compute power was going to double every 2 years. And now,
18 months.
Sorry?
18 months.
No.
Moore's law was 18 months.
Was it?
I think so. I could be wrong. I thought it was 18 months.
Oh, I always thought it was double at 2 years, but okay, 18 months. But Sundar Pichai came out and was talking about how they've been holding up during AI advancements, doubling every 6 months.
Can you read this, please?
Sorry, zoom it in a little bit. Sorry, I forgot that I was going to read it. I also expect that 2025 will be the year when it becomes possible to build an AI engineering agent that has coding and problem-solving abilities for around a good mid-level engineer. This is Meta.
Yes, it is.
I listened to this call.
When you think about how the world is going to change and how dependent companies are going to become, this tells me that in 4 years from now, no more coders for any of these tech companies.
Right.
You're going to have supervisors to program stuff, but you're not going to have coders and to put stuff together. This is all going to do it on its own. You're going to tell it what you want, and it's going to do it.
The coding language of the future is going to be English-based or language-based. So the real coders are going to be the designers.
Yeah, it's going to be like you're a director of a movie or something, because this is going to be so profound. The whole idea of learn to code is done. It's going to change so much. So we really may have another couple of years of big growth for Nvidia. And I'm sorry, if they don't grow and they become an Apple, like what Apple was for 2 or 3 years, where maybe their revenue goes down by 2%, they can still go up because they're going to be buying back so many shares. I mean, at a 56% margin, they could flatline their revenue here and manufacture earnings by buying back $50 to $100 billion worth of shares a year, because they really have no debt.
Yeah.
So this is a screaming buy, in my opinion, because this profitability, they're now the 4th largest or 5th largest profitable company. They're going to become the 3rd or 4th this year, with the potential to be number 1. And I say that because I don't think Berkshire can replicate this year again, because they made a lot of money selling stock. So I don't think that their true net income is anywhere near what they just did. I think it's going to be an anomaly. Alphabet did 101 billion. Apple did like 98 billion. And then you have Google and Microsoft that both did in the 70s, I believe. So Nvidia is going to be in the top 3 of big tech this year, and they could be number 1 next year pretty easily. It's just, why would you not want to own this here when there's no signs that demand for their chips are slowing down or the spend on capex is going to slow down? I can't find a single bear case for them.
It's accelerating, and like,
look, getting mad at Nvidia not doing 100%, like that was the bear case. Oh, they didn't grow by 100% this year. Yeah, they're a $3 trillion company growing at 50%. Like, what are you complaining about?
So in terms of the more macro bear cases that people are worried about, we'll start on the short term, and then we'll move into the extremely long term.
It doesn't matter for Nvidia.
Tariffs,
Nothing burger.
China potentially being restricted from buying the H20 chips.
Nothing burger. China was restricted before, and they still got their hands on them.
So you think even if a broader range of chips are restricted, that potentially Singapore's numbers are just going to keep going up?
Yeah, they're either going to find their way in there, or they're just going to buy whatever they can get their hands on. Like, they're not going to stop buying chips. Maybe they don't get the best chips, but they're going to get something. And that capex spend that I just showed has zero China exposure.
Yeah. Well, you're right. Zero. You showed off 4 companies.
They're going to spend $320 billion.
Was Oracle even on that list? No. Isn't that funny, eh?
No China exposure.
What were the companies that you picked on there?
The big 4: Amazon, Alphabet, Meta, Microsoft.
Okay.
Doesn't even include Tesla, doesn't include XAI, doesn't include Oracle,
Google.
Doesn't include any of them.
Oh, no, you said Alphabet. Sorry.
Yeah.
That
I'm
is
not worried about tariffs. I'm not worried about China. I'm not worried about interest rates. And I'm not worried about the spend, because guess what? These companies are funding this all from free cash flow, or from cash from operations, I should say. They're not tapping the debt markets.
So let's talk about Nvidia's next leg of growth.
So hold on. Let's just look at Alphabet's, or let's look at Alphabet's actual cash flow statement for 1 sec before we do that, because this is very important.
I'm going to mark down some of these comments, because some of these are actually really good.
So let's look at this real quick. So this year, Alphabet did $125 billion in cash from operations and spent $52 billion. Every time that they have done this, they keep expanding their cash flow. Now, they're saying $75 billion they're going to spend this year. Even if they don't increase cash from operations, which I don't see how that's not going to be possible, but even if they don't, they're still going to have $50 billion free cash flow. I mean, they're not tapping the debt markets. This is coming straight from their cash from operations. So I'm not worried at all, because even if you get into a slowing economy, these companies are recession proof. Alphabet is recession proof. Look at 2020, okay? This was COVID. What happened? Oh, they went up by $9 billion in cash from operations during the worst recession that we've seen in God knows how long. Just saying.
Yeah. No, I mean, they are extremely resilient businesses. And I think, honestly, because it is like a technological race, I think none of them can slow down, because the other ones would take such large leads.
Unless they want their competitors to get ahead of them, they cannot slow down. And when it comes to their businesses, incredibly sticky. Let's think about it. Okay, Microsoft. Recession happens. Nobody's getting rid of Azure hosting if they're a business. No businesses are getting rid of Microsoft Office. No businesses are stopping their hosting or email or any of that stuff. Then you think about everything else Microsoft does. Incredibly sticky business. Alphabet and Meta. Nobody is stopping advertising. You're actually going to want to focus your advertising on the best targeted. You may stop radio stations. You may curtail TV. That's the last thing to stop.
Yeah, I mean, advertising does slow in a recession.
It'll slow, but where the money gets spent will not slow. And it's going to get spent on Alphabet and Meta for the top 2, because there's nowhere else to get the ROI on that investment.
Yeah, but just total advertising spend can go down.
Could, but it is unlikely that those companies will be in trouble because of it. And a recession likely will not be several years. Several quarters is more likely. And then you think about Amazon. I don't see that slowing down.
Yeah.
In fact, people are probably just going to continue to buy from e-commerce.
Now, well, I mean, there is potential for this. I think you're being a little too bullish here on ad spend or
I mean, I'm looking at
consumer
Alphabet right
spending.
now. Their revenue went from 162 to 183 billion during COVID. Nothing
Yeah, but
slowed down.
that's because
They weren't selling
COVID was very
computers.
short-lived for
They
e-com.
didn't get a tech boost because of increased hardware sales.
You don't think that Amazon got a tech boost?
I'm talking about Alphabet, not Amazon.
Well, I think they did. I think more people went online.
I don't know about that. I mean, Apple certainly got a huge boost with people refreshing computers. Microsoft certainly got a tech boost. Maybe Alphabet did. I don't think they did.
I don't know. You're in the Thunderdome now.
Well, look, that was the biggest recession we've had. All these companies expanded. Why are you smiling?
Well, because of the comments that I made about 8 or 8:30, and then I'm just thinking about what you said. Because I think you're wrong here. But why don't we talk about the chip competitors here?
What's the point?
AMD.
What's the point? Why would you want to talk about the second best?
Are they going to eat Nvidia's lunch?
No, don't even bother. Why waste our time?
This guy here says that AMD is all he needs.
Have fun with that.
Okay.
If you want to talk about AMD versus Intel, that's a different story. Don't talk about AMD versus Nvidia. So I got news for everybody. Nobody's buying AMD freaking chips for AI. Sorry, I was thinking about virtual reality. AMD, you'll see it on the computer side. You'll see them big on the GPU side for that, and you'll see them for server chips, a little bit more CPUs. But nobody is buying AMD for data centers.
Not a lot. They have data center spend, that's for sure.
Yeah, compared to Nvidia, what is it? You put the two together.
Was it
5%?
10, yeah, 5%, something like that. What is it? 7 billion now?
And the fact that you can just rip and replace components in Nvidia's hoppers, and you can have Blackwell Gen 1 with the H200s and Blackwell Gen 2 when it comes out in the same servers. Nobody's putting AMD stuff in because it doesn't make sense to them.
Yeah. And then the networking as well, right? It's just absolutely shit. Nvidia is so far ahead in other areas as well that makes their products even better, to work together.
And I am not saying that AMD doesn't make good products. I'm just saying that for this, the spend has spoken, and the spend is going to Nvidia. That's all there is to it. If AMD had products that were comparable, you would not see the massive increase in revenue from Nvidia. It's not the case.
Yeah. So
why do you want to invest in something that has to play so much catch up and convince everybody that they are an equal competitor when the market is telling you they're not? You're fighting an uphill battle with lead shoes. It's not worth it.
No, but if Lisa says, or if what happens where she's going to get tens of billions of dollars of data center spend over the next couple of years, they are looking very cheap from a valuation perspective.
Oh, so they're going to generate tens of billions of dollars of spend, in additional spend over the next couple of years, when Nvidia is going to generate that in a quarter. Yeah, cool story.
Yeah, but
interested.
But you pay for that. You're looking at a company with a very different market cap than. I'm a shareholder of one of these companies. You're making me sound like I'm defending this company.
You're looking at EPS of 20 times 2027 earnings for Nvidia. Why go anywhere else? Why go down to a second or third derivative of it?
I agree. I tell people to do that all the time. Just buy the best. But it is important to look at. I mean, you look at like 6,000 different names a year. So.
Yeah, but I don't waste my time looking at Nvidia. I'm sorry, looking at AMD over Nvidia.
Yeah.
Because there's nothing to look at. You want to talk about Intel, it's a different story because they're a much more comparable company because it's laptop, it's desktop, and it's server.
Right.
So it's not a good competitor for you to look at with Nvidia. Nvidia does, I hate saying this, but Nvidia is the one company that at this point in time, they don't have competition.
Yeah.
And I don't like saying that, but it's the truth.
Dude, they don't have competition for what they currently offer, and yet they're putting out new products, which is actually what is potentially holding back their sales from not exploding, is that some companies will hold off for additional quarters to get their next products.
Yes.
And so their literal biggest competitor is Nvidia. Nvidia is the biggest holdback of their sales. It's insane.
Think about this. If AMD's products can't compete with Nvidia's Blackwell now, what's going to happen in 6 months when Blackwell 2 comes out?
Yeah, Blackwell Ultra.
So I'm not saying AMD can't go up. I'm just saying it's not something I would put my money in.
Yeah. No, it's I'm very excited. But then here, let's last stuff on AMD or on Nvidia, and then we'll move on to some other names. What do you think about the next S curves that they could potentially get into? Autonomous vehicles and robotics. I know you have some pretty good ideas or interesting ideas there.
Yeah, I mean, look, I think robots, it's not just humanoid robots, it's every type of robotic that we're going to have in the future. And I think they're going to be normalized. And I think they're all going to be hooked up to a neuro package where through Wi-Fi, where they're just going to be getting smarter every second. Because if you have a group of robots, let's just say Tesla or Figure or one of these companies puts out 100,000 robots. We know that they have a server farm. So there's going to be an up and down line.
They already do this, by the way.
They're going to be uploading all the data that they're doing, and then they're going to be aggregating it and pushing it back out to make the robots work more efficiently, because they're going to learn off of each task. What happens when you have 1 million robots and then 10 million robots doing that? And then they're going to be able to charge for a monthly package for the learning. You're going to need so many more chips for this. And as you introduce more robots, it's just going to take up more data center capacity. And the robots will probably have some type of NVIDIA chip in them. So the potential is crazy. And then when full self-driving actually takes off, because it would be naive to think that that's not going to be a thing in the next 10 to 20 years, I'm not buying that you're going to have nationwide full self-driving in 1 to 2 years. But I think 5 to 10 or even 10 to 20, you can make a good argument for it. And when that happens, the amount of spend that's going to happen because of the amount of data centers you're going to need to pull that off. I mean, NVIDIA could actually replicate their previous growth over the next decade that we just saw in the share price, which is crazy to think because it's already up so much. Yeah. Maybe not past decade, but past 5 years, maybe.
I honestly think that the way we look at the world is going to change. Like, I think that, like, well, I mean, just like instead of certain industrial type areas and then residential, I think that there's going to be these insanely large data centers that are just pumping out all this AI compute that robots are going to end up going and doing all the physical jobs, and then AI is going to do all the software jobs. And that sounds so futuristic that it's impossible to potentially believe. But the change in AI is proving that this absolutely will be the case, because there's a real like it's almost like a freaking Manhattan Project type thing. We need to get there before China does. So governments are behind this. They don't want any of these companies to slow down. Okay. And then two, like, there's real revenue behind these products. It's not something that they want to do like some sort of experiment or science project. This is real money-making efforts. So companies are rushing to get to this gold mine.
They have to do it. That's the bottom line. They have to do it.
It's absolutely insane.
So yeah, I'm with you. And I wasn't into NVIDIA. Now I am. And I mean, I bought more today. I think it's a winner. I'm not seeing the competition. I'm not seeing the spend stop. And the same way that I said the yen carry trade was going to blow over in a couple of days, I said the DeepSeek thing would blow over in a couple of days. And I think there's going to be more advances. I'm not buying that they did this on $5 million. They never said how much money they spent on the actual hardware that went into pulling that off.
Yeah.
And I'm telling you, you're going to get more advances over the next year or two. And they're all going to be bullish for the whole sector. They're all going to be bullish.
Let's talk some Sofi.
Who cares about Sofi?
330 people watching right now.
Okay.
Here, one sec. I gotta let this cat out of the room. What are your thoughts? You buying any?
No.
Why not? We're dipping down into the $14 ranges. That doesn't interest you in getting some more shares?
No, if it goes to 7, I'll buy more.
Why?
I'm not excited about Sofi anymore.
Any more or not right now?
I was considering selling it today and buying more Nvidia.
Okay, tell me.
Look,
what has changed?
I have not written an article yet because I'm still flushing out my feelings on this, but I'm not happy. I'm not a happy camper. And the main reasons are, and I take nothing away from what the management team has done because
Can I guess?
You already know what I'm going to say, so go ahead.
You don't like the fact that they are referring out business accounts and that you want them to do that in-house.
Yes, that's one.
You want them to start offering more wealth management tools for higher net worth individuals.
Not higher net worth individuals, just wealth management tools in general.
Okay.
That's number 2.
Is there another one?
Yes.
I don't know. Am I missing something? What?
Tech platform.
Oh, okay. Yeah, sure.
So, look, they are a bank. What do banks do? They collect money and they lend money. That's what a bank does. It's a place to store your money and it's a place to borrow with a whole lot of other features. The fact that they have a bank, national bank, and they are not doing business banking directly is crazy. Don't take a small piece of the pie. Build that out. Because if you want to become a top 10 bank in the country, you have to have that internally. Noto's got to know that. Like, I would love to have a conversation with him about just that topic. I won't talk about anything else. I won't bring up the RFPs, won't bring up the tech platform, just the business banking so he can make me understand. I am sure he's got a really good reason why they did that, but it was not expressed on the conference calls. And the fact that they are going outside, just taking a small referral fee is irking at me because you can turn that into such a huge business because SoFi already has proprietary mutual funds and ETFs. You build the business segment, you get businesses to use you as their lender and their banking platform. And then you go to them, hey, we also have wealth management and we can become the custodian of your 401k or 403b plans. And then you become an asset manager the same way Vanguard is, State Street, Fidelity, Empower, TIAA, any of those companies. So now you get a business, you get the VIG on the accounts, you get the VIG on the lending, and then you offer them wealth management. And not only are you going to get that quarterly asset management fee, but if the people in the plan are picking SoFi's S&P index fund over SPY or mutual funds from SoFi over Fidelity or Schwab, they're also getting the management fee from that vehicle, and they're double dipping. It is such a miss for not doing this, and it doesn't make sense to me why they're not doing it.
Potentially, that these types of products are very hard to differentiate themselves versus the competitors. So I was actually recording a video. I wanted it to.
You did not say that.
So I was recording a video earlier, and I wish I got it out, but it'll be out tomorrow. But one of the things that this ex-SoFi employee talked about and why they're having, or they can take away a certain audience away from the big banks, but they have a harder time taking away the older generation away, is because they actually don't care about APY and checking accounts, because the high majority of their money is in investing or like invested in markets. And they have a hard time competing where JP Morgan or a Schwab or a Fidelity have great products there. But on the checking account, on the UX component side, they really lack. But the older you get, that doesn't matter as much.
I can't look at the comment section. I just looked at it for the first time. There's one comment that just made me laugh, so I can't look at it anymore.
Was it buy more Cash App?
No, it had nothing to do with stocks. Anyway, Tanner, I'm not changing my stance on this. I don't think that not being able to differentiate is the correct way to look at it, because they are differentiating by being cloud first, being able to offer higher rates, and being more nimble. That doesn't mean that they can't compete on business and wealth management, because you look at the people that they're giving loans to on personal loans, and you look at their average person on student debt, they're all people that make six figures and have higher credit scores. So they would also likely need those services at some point in their lives also. And then when you look at businesses, and basically anybody who's contributing to a 401k or 403b is buying every 2 weeks. They're getting a management fee for basically doing nothing, just holding the assets on their platform. It's a missed opportunity.
I think that they will be there. I just think, like, look at Nubank, for example. They have 104.
Don't care about Nubank.
I know you don't care about Nubank, but Nubank is what every company wants to be. Like, they are the best in the business. I promise you this.
Okay.
So
not interested. I don't like investing outside the US.
That's fine. All I'm saying is, why aren't they going for a similar opportunity? Why are they focused solely on consumer products? Like, instead of trying to go to business accounts or whatever. And SoFi could do that with SoFi at Work, but I'm sure that is on the roadmap down the road. It's just potentially they have opportunities that are easier to capture and that they could make.
No. The fact that they are outsourcing is a missed opportunity, because anybody who hit that link and set up a business account based on that referral is a client that you're never going to get now, or that you didn't get.
That might not be true.
But you can't prove it isn't.
Yeah, but they
went to the website for that reason and got referred somewhere else. They would have opened the account with SoFi if they had the chance to. It's a missed opportunity.
SoFi's been referring for a long time.
I don't like it.
They do it on credit cards. They do it on loans. And then somehow their credit cards and loans, they all continue to grow.
I don't have a problem with credit cards, because they do it after you get to a certain tier. I don't have a problem with that, because it's deleveraging their risk.
Okay.
I don't have a problem with that. We're talking about wealth management services.
Yeah. But all I'm saying is,
you're saying that if they had $100 billion of wealth management,
stop focusing on what they're not doing. You're focusing on what they're not doing. Like, Cash App's not doing wealth management. Why doesn't your favorite Block do this?
Oh, you want to talk about Block, huh?
No, I'm just saying, you see, like, why does SoFi
Block's not a bank first?
Well, I mean, they're partially a bank.
They're not a bank.
They have partial bank charters.
They're not a bank.
But what's it called? I just think, like, you don't see what's going on with the loan platform business, and that doesn't get you excited?
Well, unlike many people,
that's got to be the greatest add to their business since we've held it.
Look, unlike many people, I've actually been an investor in Blue Owl's Business Development Corporation for like 6 or 7 years.
Okay.
Blue Owl Capital Corporation, OBDC. So I know exactly how powerful that is, because I actually know a lot about the Blue Owl Corporation. Okay. I am excited about that. I'm just saying that they are missing a huge opportunity with business banking and wealth management. Huge.
That's just one deal, though. The Blue Owl Capital deal is one deal.
Every
Fortress, BlackRock, all these other businesses that they're doing.
every $1 billion of missed wealth management at a 1% level is $10 million of pure income that they're losing out on. They grow that to $100 billion. That's a great new business segment.
Yeah, I just think that they have potential, the pipes are already laid for the consumer side that they're already dealing in. And I'd rather see them develop a massive credit card business before they get into wealth management.
Why can't they do both at the same time?
I'm sure they could, but I think that they also are trying to stay very profitable. And to do both would be a massive outlay of capital to build new products,
Isn't that the reason that they bought Technisys and that they bought Galileo and built a full stack so they could do everything quickly at their own time frame?
So yes, but they're not fully integrated with those tools yet.
Aren't they though?
No, that's the end of 2025. They should be fully integrated.
It's this year that they're fully integrated.
What?
It's this year that they should be.
The end of this year. So maybe wealth tools start popping out of Sofi like crazy at that point. But
they need it for credibility.
I think what they're looking at is that they are going after a very specific demographic.
Hold on. Think about this. They have a partnership with the NBA, right?
Yeah.
Wouldn't it be nice to have wealth management and all that stuff, considering their partnership with the NBA and sports leagues now with golf? I'm telling you, if they had that and they had a booth at every golf tournament, forget it.
I think that they are going after a very specific demographic, okay, which is this 25 to 40 aged people who are in the right careers, but they're not rich yet. Going after investing products would not be their target audience. They are looking to get people who are just trying to
it worked pretty good for Robinhood.
I mean, they're just starting to get into advisory and they're just starting to climb up in their
No. Your statement was investment products, not wealth management.
Well, Sofi has investment products. You are talking about more about advisory. You're talking about like higher level wealth products. Sofi has investing products.
Yeah, I am talking about wealth management, 401k plan administration.
Yeah.
Yes.
Yeah. So this is going to be for a much more mature customer, one that Sofi really hasn't captured yet.
And they should start doing it. They have a big enough brand where they should start. There's no time like the present.
Yeah. But
and
I think that
from a sentiment standpoint, it may make some of these analysts turn around and be like, oh, this company's growing up. Oh, they're going to start taking market share away from these companies.
But credit cards, although they can seem very, plain Jane,
they're a great business.
It's a $1 trillion industry.
It's a great business.
So
is the loan business, but that doesn't mean that we can't use the other businesses.
Yeah. But how many products do you want coming out at the exact same time? You ever heard of being?
It's different groups of people.
You ever? Are you a peanut butter guy or a Nutella guy?
Where are you going with this?
Sometimes it's not good to be spread too thin. You got to have some focus.
Well, that's why I use both at the same time.
Yeah, but no, I think Sofi is trying to have a little bit of focus. And tomorrow's video makes this a lot easier. That's why you have
different divisions. Sofi is not a 10-person company. Sofi has the ability to have different divisions reporting into Noto and pull this off. They're not a small company.
Yahoo died because they didn't focus, and they were a big company.
Yahoo died because they had a huge competitor called Alphabet.
Because Google was more focused. Do you think that it's possible for a company to just go after every opportunity that they see in front of them?
Yes.
I don't think that's true. I think even Google at their size is backing out of certain businesses because they need more focus.
Going after and backing out are two different things. Google still went after those. They just decided they weren't worth continuing to pursue.
Why? Why? There's total addressable markets in every industry they've gone into.
Which ones are you talking about?
Well, I mean, it could be for any business. I
I'm
brought up.
asking you Google specific. You brought it up. What are you talking about? Which ones?
Well, I'd rather
Uh-huh.
the products that I'm actually thinking about are more Amazon. And I should have said Amazon with, whether it's healthcare or the Fire Phone or any of these products that they've went after that have massive total addressable markets that they've left.
So Amazon decided not to pursue Fire Phone or any of that stuff because they weren't able to chip away at Android or iPhone. The beauty about Amazon is they can try whatever they want to try because how much money they produce. Doesn't matter.
Yeah,
Same thing with Apple.
I think that there is talk. I'm sure there's some guy.
Apple wrote off a whole division of cars like it was nothing.
Yeah, I mean, maybe there should be a little bit more testing and iterating at Sofi, but this is the reason why you want to sell?
Look, I'm not happy with the banking platform.
Are the numbers disappointing you? You're a fundamentals guy.
No, look, the numbers are great. The growth is great. When you put it against these other companies that got a bid, it looks undervalued. But I'm not happy about the RFP process. And I'm not happy because we're not getting clarity. All you have to say is we are still working on the RFPs. We were in the final stages of, you can say you're in the final stages of 5 RFPs or 10 RFPs, as long as you don't say who they're with or who the competitors are. You can give broad strokes. All we need was broad strokes. Spend 2 minutes on that. You've been dangling this in front of us for over a year now.
They said they haven't lost any deals yet.
Right, but we don't know how many deals they're working on. And they should really say, okay, you have large financial centers, you have regional banks, and you have thrift banks. We're currently working on 2 deals on large financial centers, 5 deals on regionals, and 10 deals on thrift. And it's looking promising. Just give us something without getting in trouble, because you're not disclosing anything by that. You're telling the shareholders, who are technically the owners of the company, what you're working on. You're not divulging anything from NDAs.
No, I agree.
You can easily say that and then actually make people get excited about this because, hey, there seems to be a lot of interest. Like right now, the street doesn't think the tech platform's real because they have no idea what the interest is for their platform. So you can't even start saying banking as a service anymore because we have no idea how big this could potentially be anymore, because SoFi is not telling us how many deals they're working on. What does the deal book look like?
Well, I'm actually getting reinvigorated in Galileo. I think that they just caught a new leg of growth, and I'm curious if you've been following what they're talking about with this co-branded card situation. Have you seen this?
With the hotel chain or whatever it was?
Mm-hmm.
Yeah, I saw all of it.
And I started to look into this, and I'm like, man, why wouldn't every single hotel chain do this? Offering debit cards to people that don't want their credit cards, that like it could be a massive leg up for their business. And considering the fact that they got the largest US hotel chain by number of hotels, they could easily roll this into Hilton, Marriott, even all the airlines, Delta, United, American. Why don't all of these companies have some loyalty thing? They actually just signed a partnership with Ascenda, which is the loyalty company that all of those airlines and hotels all run on. They just signed an agreement with them. Do you not think that potentially, while they are all in these RFP processes with large financial institutions, that they roll into faster partnerships that can be signed quicker with some of these other businesses in a completely other area?
Did you ask a question? I'm reading the comments again. I couldn't help myself.
Steven, listen to me.
Sorry.
Listen. You got to stop being so bearish and looking at a single tree and focus on the forest that's behind it. Why did you like SoFi in the first place? Do you think that they've lost sight of the vision?
That they can accomplish a lot of things, and I'm up a lot on it. But at the same time, I'm looking at this as, where's my money better spent at this point, because we need clarity on certain things. And
what's that? That's Citi Group and AT&T and
you want to talk about Citi Group, huh? You want to talk about the best value play, or what was the best value play? We can talk about Citi Group if you want.
Citi Group over Sofi?
I didn't say that, but I said you could talk about Citi Group if you want. I could show you some stuff.
I don't. I'd rather read the comments. But
so, I mean, you don't buy Citi Group for the growth. You buy Citi Group the way I did, because it was drastically undervalued. And you started looking at how undervalued Citi Group was. You were getting a dividend of over 5%. It was trading at less than half its book value. And it's still trading at roughly a 15% discount. But Citigroup's gone from roughly 40 to 80. So
I'm just saying, where's your money better spent?
We can talk about that.
I'm going to Tip Ranks and looking up Stephen Fiorillo.
Oh, it's probably pretty bad right now. I'm definitely not top 200 anymore, but I don't fucking care.
You're top 231.
I don't care. I don't write. So I don't write to try to get a high rank. I don't care what my ranking is.
I'm actually bringing this up because some people are calling you pretty stubborn, which you can be.
I mean, I also write about how many things is 503 things I've written about. So like, not just picking Nvidia and Amazon to write about to try to juice my rating. I actually really don't care about my rating. I don't look at Tip Ranks all that often, except when somebody tells me something. I write about a lot of companies, know about a lot of companies.
Your best ranking, Palantir.
Yeah, and it's not a freaking buy anymore.
Yeah. Well, that's also the truth with the ranking systems on these things, right? It's like,
and I don't even think Tip Ranks takes dividends into consideration, which is why I can't take them that seriously. Now, if they do, I'll retract that statement, but I don't believe they take dividend income into consideration. And there's things I write about specifically for dividend income, and I don't care if they go up or down.
I'm an ambassador for Tip Ranks, and I have zero idea. So I
could care less about them. What? I could care less about them. What do you want me to say?
Sodak Zach says Tanner should charge Steve for these therapy sessions. Yeah.
So I'm going to share my screen with you. So I wrote this about a company you brought up. That's why I'm sharing the screen. In October 16, 2023, and I said this was my top value idea that was yielding over 5%. How much is it up, Tanner?
106%.
Well, that's with the dividend, but without the dividend, it's up 95%.
Okay.
All right. So now I'm going to show you something that just happened with this. And this is why I really like Citibank a lot. Not to mention Jane Foster's done an amazing job with the turnaround. Okay. But you look at how undervalued.
What did you say the CEO's name is?
Jane Foster.
Jane Foster?
Isn't it?
Isn't that an actor?
That's Jodie Foster.
No, Jane Foster was in
Isn't her name Jane Foster? Maybe I'm getting my name.
Jane Foster's from Marvel Comics. From Mighty Thor.
I have no idea who you're talking about. It's Jane something. Oh, regardless. So you look at their book value and tangible book value, they've continued to grow it. Citigroup is trading at $79. It's trading at a $10 discount to current tangible book value and a $22 discount to book value. Like, this is still, you're still getting a good value out of this. So, I mean, Citigroup is still very interesting here. You may not be getting it at such a low price. Jane Fraser, sorry. You know how many companies I follow? I was close.
Yeah. No, I get you.
But she's done a great job on the transformation. Isn't that Natalie Portman?
It's a Marvel comic superhero.
Oh, that's the character name, Jane Foster.
Yeah, I guess. All right.
So, but yes.
Oh, is this the? Oh, I think she's the wife to Thor. All right, never mind. We're off that. Citi Group is boring as all dog shit, and I'll never invest in it.
But if you did what I was talking about, you would have doubled your money and generated a big dividend.
I get it, but
it's not your cup of tea, but that doesn't mean it didn't work.
No, yes, but that doesn't mean that it would have worked if I had invested in it. And if it went the other way, I wouldn't have seen the signs for me to have avoided it.
Are you trying to say that you investing in it would have made them not do anything they did?
Yes.
Okay.
Yes.
Then sell Nvidia so it can go up. Maybe you're the Jinx.
I mean, I'm definitely the Jinx, but it's what I found is I'm the Jinx for, you know, the first little bit. Every single time that I add shares to any of my businesses, they don't move, but then after a while, then they start to move. No, I know that the stocks don't know that I own them, but what's it called? I think that it's important that you own what you know and not what your friends tell you to own, because, you know, the day that you sell it, you might not let me know that you have sold it, and it's not your obligation to do so, and I wouldn't be following it. So I'm actively betting on the companies that want to take Citigroup's market away from them. I'm not also going to bet on the company that, you know, is the incumbent losing. But are they a customer of Galileo's?
We don't know.
What's the thought there?
Well, we saw what they said in the conference call, and I sent it to you, and you said you saw it too. So we're going to find out probably over the next year.
Yeah. The only thing that, if it was true as well, that I feel like Galileo would have said something. You know, they announced a couple.
May not be allowed. They may be under an NDA. Who knows?
They could say big. They could say they've said top 5 U.S. bank.
Right, and that's where I get annoyed with them, because if they were, which we don't know if they are or they aren't, but they could have made an indication that we are currently on board a large financial institution and left it at that.
Yeah.
I just don't see how you can get in trouble for saying that. You're not saying who. You're not giving an indication of a size. So.
Yep. Now, Google. This is one that I've been putting a lot of money towards lately. What's your thought here?
I think it's a screaming buy. I mean, it's trading at under 20 times earnings. You're getting it for 14 times 2027 earnings. They just did 101 billion in net income. So people are bearish on a company that's doing 1.95 billion in net income a week.
What are your thoughts on Waymo?
It's interesting.
Do you think it'll grow to any sizable amount of their income? Like, they're so big that even whenever they make these moonshot bets and they go right, it still doesn't make a difference.
I don't know. You'd have to get so many things right with it. It could be, but I think the other businesses are so big that that's going to take 3 to 5 years to have any significant impact.
Yeah. Did you see Google Cloud Platform ended up winning over Salesforce's $2.5 billion contract?
Mm-hmm.
You excited about that?
Yeah, I'm excited about everything they do.
Do you think that Google has an advantage or a leg up over AWS or Azure whenever it comes to AI products in this next wave of cloud?
I don't know.
It seems to be what people are writing about for this Salesforce thing, is that it's really the AI tools that really push them in that direction. Do you think that that's true?
I don't know enough about the underlying technology because I don't work with that stuff. So it'd be unfair for me to give an opinion because I truly don't know what I don't know.
Got you.
We can have a conversation about the fundamentals about the companies, but I can't have a conversation about the underlying tech.
Google or Amazon right now?
So here's where I get with that question, because I own both.
Yeah.
I wouldn't pick one over the other. I want both in my portfolio. But if you're asking me what has the most potential over a 5-year time frame, it could be Amazon for one very specific reason. they're going to become the first company to reach $1 trillion revenue. And I think the news cycle off of that's going to be huge. And by that time, when they do that in 2029, you may be on a lower capex spend where they're on maintenance and they're not spending 100 billion on capex, or by that time 150 billion. So they'll be able to scale that down, pump more cash from operations out, and see a tremendous amount of free cash flow coming in and implement a huge buyback program. So I think there's a lot of catalysts that the street will eat up on Amazon, whereas Alphabet, I think it's better value, and I think that it's going to make more money over the next 5 years on a total addressable market for the net income. But I mean, Amazon's got too much that they can do to get the news cycle and get everybody excited about it.
I am surprised by that answer. I don't think anyone's going to care at all. I think that there will be an article about it and then everyone will move on with their day. Who cares about another zero?
The first of it's ever happening. Walmart
doesn't
like
matter.
70.
It doesn't matter.
It matters.
If they're doing $990 billion of revenue and then the next quarter they do over $1 trillion, that quarter was different than the last one?
It's a new milestone, one. Two, if they get their margin to 15%, you're not talking about an operating margin of $150 billion a year. After taxes and stuff.
The margins are improving for sure.
Margins are improving.
Even on institutional sales or international sales, they're getting positive.
Margins are improving. And when you start talking about those numbers, a low margin business is still incredibly profitable.
Yeah. Now, okay, wait. This is a really great question. We'll end here because I got to go into the SoFi Weekly after this. But
what time's SoFi Weekly?
10 o'clock.
Oh.
But what's it called? Right now, we're seeing a little bit more uncertain markets. And I've sort of been pushing my portfolio a little bit over into big tech. Do you think that that's a good idea? There's been a lot of people chasing names like Palantir that have gotten into riskier and riskier and riskier names. What are your thoughts on this? And do you think, people need some portfolio rebalancing?
I don't understand why people invest in certain companies. I say it all the time. I don't understand anchovy. I don't understand...
Anchovy is Archer Aviation is what he meant to say. And he's saying anchovy and Joby. And it's... God, that caught me
I was waiting for the past hour to slip that in at some point. I should have waited till you took a sip of something.
Dude, all my monitors,
I didn't realize you had a drink there. I should have waited for that.
Anchovy. He's talking about Archer Aviation.
Yeah, they don't do...
Hey, I didn't even tell you. So you like Figure. Brett Adcock, the guy that did that, was previously at Archer Aviation. That's to my understanding.
Okay.
That was like his thing, I think.
Don't generate revenue. They lose money. And unless they dilute shareholders, they're going to have about 50 million in cash on hand after this year.
They'll be fine.
But to answer your question, I like big tech a lot here. They are too big right now where there's things to worry about. They are the most profitable companies in the market. They are generating the most revenue. They are the new defense companies. I don't think Coca-Cola, Walmart, Costco, I don't think that's your value anymore. I think these are your value companies because they are all able to manufacture earnings by buying back shares. They are continuing to grow, and buybacks are super important. And when you're buying back, like you look at Apple.
Why hasn't Amazon followed trend there, though?
Amazon hasn't followed trend because of how much they're spending on capex. They've been ahead of the curve on capex for so long, not because of data centers, but because of the logistical network. So they've had to spend. There were years where Amazon was spending more than Microsoft, FedEx, UPS, Walmart, and Target put together. It's only in the past 2 years that Microsoft is catching up because of data centers. But Amazon has spent so much because they're not just a tech company. They have arguably the best logistical network behind the Department of Defense.
Right.
That's very cash intensive. Man, I should have waited to say anchovy. Should have waited.
Nope.
It's very cash intensive. So when they're able to scale back a little bit on that, you're going to see such an influx of free cash flow that they're going to probably implement a huge buyback program. I don't think it happens for 3 or 4 years. I really don't.
Yeah, I'm buying more. I'm buying Amazon and Google, but honestly, because the latest dip on Google, it's just like gotten much cheaper than Amazon. I've been buying more Google, so now my size in Google is larger than Amazon, especially on a book value basis.
I don't hate those. I mean, my largest is Meta out of all of them.
I don't own that one.
By a long shot.
By a long shot?
A long shot.
Wow.
Yeah.
No, I'm Nvidia first right now, Shopify, Tesla, Salesforce, Sofi.
Ooh, I like that. I'm a big fan of Salesforce.
I've been a Salesforce shareholder for a long time.
Yeah, I'm a big fan of Salesforce. I'm a big fan of a lot of these companies. But once again, I don't understand why people were buying Palantir in the hundreds when there were so many good buys in big tech. I don't understand why people are buying Hims or Anchovy or Rocket Lab or any of these companies. I don't get it. Or Joby. I truly don't understand.
I agree, but momentum is a real thing, and frenzies happen. Animal spirits happen.
It isn't. And I'm not smart enough to be able to pick tops, and I'm not looking for trades. You know, there's one trade that I made based off of information that made sense to me, and it was SMCI.
Yeah.
And that's the only thing that I've done for a trade in a long time. Everything else is long-term investments.
Well, what I think is so weird about retail is I think for the longest time as they always want to buy things that haven't ran yet in areas that are running.
Yeah, but for things to run, you need good fundamentals at some point.
I'm not saying it's a good idea. All I'm saying is with Nvidia, what happened was this company skyrocketed over the last couple of years, and now I think like in their heads they still think that it's a very expensive company, but they don't realize how fast fundamentals caught up to the price that it's accelerated at. And if a company like that stagnates for 3 months, the valuation gets cut. Like if you're growing in triple digits, it gets cut very quickly.
Nvidia has gone nowhere since last quarter.
Yeah, or
it had a face ripper quarter last quarter, did nothing, and had a face ripper quarter this quarter and did nothing. It is consolidating, and I think it's going to be pretty scary when it actually has a leg up. And one of the reasons why I don't think it's having a leg up is because people are expecting it to have these triple-digit growth numbers or this new aha moment, and they're not accepting that the aha moment is a 55% margin that is generating so much profit and the buybacks. They're expecting what is not realistic. You can't grow at 100% year over year. You can't do it. No company ever has, and no company ever will.
Yeah, no, I agree. But I do think that there is more S curves to come that are going to keep the like one of the things, if you look at their automotive revenues right now, it doesn't look like much. It looks bottomed out, but go back and look at data centers whenever data centers was smaller than gaming. That was not expected to be their large. This was a gaming company since I've owned it.
Oh yeah.
And
100%.
And then it's just become, gaming is just that add-on to their existing business of data centers. And I think that automotive is going to be another one of those features where it's really small, but it's growing at a 30% growth rate quarter over quarter. And that's going to continue to happen. And once that breakthrough happens, where This is fully legalized, and there is a path where companies can create and integrate with the softwares that are existed and licensed, available, that what happened in data center will happen in automotive. And that will become larger than gaming as well. It'll be another leg of their business. You're going to have a 3-prong of this company. And then right behind that will be robotics. And
well, I'll tell you the one that I'm not excited about at the moment. And that's Tesla.
I'm not excited about Tesla either right now.
I think Tesla goes under 225.
I think that could happen. I'm not even buying it right now. But
I like it for 10 or 15 years in the future. I hate it for today. People said I was crazy at 400 when I was like, this ain't lasting. It's going to go down. The quarter sucked. It was, I need to really, I've been trying to hold off on writing the article. The quarter was so bad from what everybody was expecting. And when you look at things, they're not generating a lot of profit from their underlying businesses right now. This company is trading on what may or may not happen in the future. And that's a problem.
Yeah, I think that, people are waiting for that light switch. And when it happens, it happens. Like, look at what's happening with Waymo. And that's a fraction of what's going to happen with Tesla.
And I get that. But this is also a company that did $7 billion worth of net income. It was worth over $1 trillion.
Yeah.
I mean, that's not, I don't know. The other problem with Tesla right now is Elon is spending so much time in DC that I think there are people that are questioning his ability to run all the companies that he is running and do what he's doing in DC. And whether he can and whether stuff doesn't skip a beat, it's the perception. And I think that that's bleeding into the stock.
Steve, I got to run. It's 10 o'clock. So we got to
go for a jog.
I got to go to the Sofi Weekly.
I
don't know where these old man jokes.
That's not a run.
I have to run.
Well, then you should go outside and go for a run.
I texted him the other day. I said, "What's up?" Actually, this was today. I texted him. I said, "What's up?" He said, "The ceiling." I was like, "I'm never texting you again."
The ceiling's above me.
Okay. Are you coming to the Sofi Weekly?
No, I don't want to talk about Sofi.
Well, we'll talk about other things as well. You want to come hang out with the boys? I'll send you an invite and then you can decide.
You can email me a link.
Ladies
None of this. Don't send me links in WhatsApp because then I have to copy them and I got to resend them.
I'll send them to you. I'm going to send it to you in X. That's as best as you're going to get. I'm not emailing you anything.
I have X on my cell phone. Email it to me so I can just click it from my computer.
I don't even have your email, Steve.
Of course you have my email.
I'm going to put it in.
You have my email. You're trying to say you don't have my email?
I'm leaving right now.
You're trying to say you don't have my email.
Ladies and gentlemen, thank you all so much for watching. Bye for now.
Why are you trying to say you don't have my email?